Okay, good morning, Poppyjo. Good morning, everyone. Welcome to another episode of TN Chats, episode 8 to be precise, of TN Chats 2025. Thank you guys for joining as always. This is your host, Ryan FX, and with me today I have PoppyjoeFx. Poppy, please say hi to the team.
Good morning, everyone. So, my name is Joseph, but of course, you can call me PoppyjoeFx, and I'm happy to be here this morning.
Thank you very much, Poppyjo. Today we are looking at something, something similar to what we discussed in the episode 7, which was, SMC ICT we're all retail traders. They're just basically concepts, and they're all retail concepts at the end of the day because they are majorly used by retail traders. And in today's episode, we're looking at dissecting and understanding if if truly, SMC and ICT entry models are really enough, considering the fact that, in the books, we have an understanding that confluences are built by, using 2 to 3 indicators. When we mean indicators, we don't necessarily mean your RSIs and all of those things, but basically an indicator is anything that helps you understand something better or gives you more insight into something. And confluences are made up of using 1 to 3, indicators. And so now we're asking, and what we're trying to understand is, are these entry models really enough? The SMC models, the ICT models, the Wyckoff models, or is there still a need for us to put other things into place? Should we consider other things before just using these models into taking trades or making decisions before we take a trade? And one of the things we're going to be doing today is discuss if Confluence is being misused or misunderstood, and we want to dive into the role of entry models, and then we also want to gain more insight on Poppyjo's experience with SMC and ICT, and how he has been able to form his own trading system, which he calls PAC, and what in confluences he uses to trade. And then we'll also look at a real chat example of how personally I use confluences, regardless whatever kind of entry models I use, and how I come about my confluences. So thank you again, Poppyjo, for making out the time to be with us today and share your experiences with us, and teach us and help us learn as well. I mean, it's not easy to put people on the spot and ask them to share knowledge, but thank you for making out the time to be with us. And so before we head further into the hammer of today, Poppyjo, could you just share with us briefly your person, your experience as a trader, your background and everything, just 2 to 3 minutes.
All right. Thank you so much, my boss, Ryan. So, good morning once again to everyone. And I would like to introduce myself again as Joseph Adiogun, popularly known as, of course, known as PoppyjoeFx. Now, talking about trading, I have been trading since 2019. I started learning Forex basically like in 2018, but let's just say I got into the space majorly in 2019. And of course, since then, we started with all these retail concepts. We've done the retail, the support, and the resistance. Just name it, the indicators trading and every other thing. I got into ICT trading, like ICT concepts, early 2020, and of course, 2022 was when I actually got into SMC trading. Now, the reason why I'm saying all this is because trading and the particular topic in question for today is something that I can relate to so well. I have a lot of people that would always wonder, ICT concept is a popular concept. People are making money with it. Some would also argue about the SMC concept. There has been several arguments regarding these two concepts. Like they will even be trying to even look for the one that is more superior. That is ICT superior to SMC, or which one is more superior? Now, based on the fact that personally I've used this concept, and the concept I trade now, which I call PAC. Now, everybody can just create a concept. That's one thing I want to make everybody understand, because I always have since I created PAC, I've gotten some kind of critics as well regarding the naming of the concept. You see people that will be like, they are just creating new names just to confuse us. They have just created new things just to sell courses and stuff like that. Then I'm just trying to like make people understand that you are not getting it. Like when it comes to trading, every other thing you hear or you learn, that is their own truth. Like Michael has taught ICT, that is his own truth about the market. Whoever has created SMC, that is their own truth about the market. Like that is the thing that works for them. Now, it is now left for we, the listeners, or should I say the students who have learned all these concepts, to now make this concept ours. Because one thing about this, all this concept that we've mentioned now, since I started trading Forex in 2020, like professionally in 2020, where I was more of ICT, like I actually started more on ICT. And one thing I will tell you is that ICT concept is complete, but it will take you a long time before you can master the concept of ICT. I believe that one is well understood by everyone. ICT concept is all around that. It has covered everything. But before you can become a master of that everything, my brother, you will suffer. Before you can become a master of that thing, it's going to take a lot of time, because there's just too many branches to this thing. And if you're unable to study the correct branch, you might just even get yourself more and more and more and more confused. Do you understand? So now, regarding the topic, actually, I did not know I might be sharing my screen for this session. So I did not really prepare much for sharing my screen. So I felt it was going to be just talk on the space and probably not involve sharing of the screen. So, but then just accept this one for me like that. I will just explain some things, and I believe there will be things that you can relate to. Now, let's go back to the topic, which is SMC ICT concepts. Are the entry models really enough? Definitely, they are not enough. Because when it comes to let's just talk about my own personal experience with trading now. Now, I have been
Poppy, are
teaching
you
for.
sharing your screen?
No, I'm not sharing my screen. I'm not sharing my screen.
Okay. Just before you go a bit further, yeah.
Yeah.
I just want to say, even if it's your phone or your tab, whatever you're using, it's okay to share your screen when you want to, but just let me know when you want to share your screen. So I would stop sharing mine as well. And then yeah, that's about it.
All right. Thank you. All right, guys. So moving on from there, the next thing that I want to just talk about is all these concepts and their entry models. Like I want to just like make us understand something about the concept that we are talking about here, which is SMC, ICT, their entry models. Now, trust me, when it comes to trading SMC concepts, I have very good experience with them. When it comes to trading ICT concepts, I have good experience with them. Now, the entry models is not the concept itself. Now, when we talk about entry models, popularly everybody knows that whenever price gets to your POI, you wait for a change of character, as they call it, or they call it a BOS. That once price does a BOS at your POI, then you trade at the other block. Now, that is an entry model. But that entry model that you're mentioning now can be traded, or can just be seen like trading without I call something without logic. Do you understand? So I don't know, but like I said, I actually did not plan to share my screen for this session. I did not know I'll be sharing my screen for the session. I don't know if Ryan is on the call now, and I've actually not joined the space with Telegram before. I don't know why this is my first time joining the space on Telegram, and trust me, I don't even know how to share my screen on Telegram. So if you will just allow me for a moment, I will join with my laptop, and I'll be able to share my screen. Is that fine? Ryan, can you hear me?
Yeah, sure, please.
All right. So, guys, I'll be back in just a few minutes, and then I'll be able to share my screen, because most of these explanations, there are things that really need some I need to just demonstrate some things for you, so you understand that entry models and patterns, they are not just the main thing. Like you just don't trade those things blindly. Because if I give you a plan now and I say my strategy or my entry model is when you see price going to your higher time frame PDRA or your higher time frame POY, then you wait for a change of character or whatever. Now those things now, there are things that are like patterns that you are always on the lookout for, but there's no narrative to them. Why should price buy at my POY? What is the thing that is driving price? Now, the conferences that we are talking about here, they are way beyond only just trading patterns, right? And they're even way beyond trading logic. There are other fundamental, like there's other part of the fundamentals as well, which is you understanding what that particular pair is expected to do from the fundamental standpoint of view. So a lot of traders are always looking at the technicals, looking for patterns, looking for when we see this one, they will expect this one to happen, or this is how price should do. Or maybe after price has given you a break of structure, then definitely it must what? It must definitely give you what you want. Whereas there are a lot of things that you need to consider. So if you permit me, I'll join back in less than 5 minutes. I'll get my laptop and then I'll be able to join, and so I'll be able to share my screen. Okay. So thank you guys.
Thank you very much, Poppy.
All right, thank you. Just a minute.
Yeah, we'll be waiting for you. And while we are waiting for Poppy to get that done, then we can also go further to discuss a few things as well, and talk about a few things that I have planned out too. Okay, so when we talk about Confluence, we first need to understand what Confluence means to each and every one of us. I mean, I wouldn't say there's an objective idea of what Confluence is. More like it's subjective to different individuals, and confluences can be born out of your trading system or an edge that you've built for yourself. See, confluences also make up an edge, okay, that you're building. So let's take, for instance, for me, when I'm taking a trade, I don't just jump into a trade because I feel that the trade is going to go my direction, or I feel like this is something I know. You see, the reason why I say I feel is because feelings is one of the illusions that happens to a lot of traders when it comes to the market. And every time we feel like, this trade should go my way or this trade should go a certain way, we end up, messing up on that trade. And here's why. When it comes to trading, we are supposed to keep, put our emotions aside and focus more on what we can see and what we know and what is on the chart and what works. So in order to build a good confluence, you need to have tested and tried out things that work and then put them together with other sources of information. So like you said, fundamentals is very important. And I believe everyone in my community know that I'm very big on fundamentals. I use fundamentals a lot to trade. I take fundamentals at the start of the week and gauge it across my technical analysis to see where the market is heading to and why I should be trading a certain currency pair or commodity or whatever it is that I'm trading. Now, that is also a confluence, because if I can tell that fundamentally I am supposed to have a bullish dollar, it then goes, to show that, okay, if my technical analysis as well is showing me, bullishness on the dollar, it means that I have a confluence. Now, not only would just my, technical analysis be enough for me, but then I tend to pair my technical analysis with a bit further of other technical instruments like indicators. People say indicators don't work, but indicators do work for me. And it all depends on how you use them and how you've studied and mastered them or improved on them. Okay. So I personally do use indicators. And one of the indicators I use is the moving average. And I also use the RSI, which is the relative strength index. That works for me. Okay. I know how I use them and I know how I combine them alongside my price action and eventually use them to take trades. So it's all about having 1, 2, 3 things that works for you, and that's what builds confluences. Now, why is confluence important? Confluences are important because they create a conviction in your trading. You see, when you've seen something happen 1, 2, 3, 4, 5, 6, 7 times, at least, and you've used the same thing over and over and over again, and you've paired these 3 things together, and somehow every time these 3 things meet at a point, you are at least 65 to 75% certain that prices would go in the direction of which you're seeing it go to. Now, that gives you a conviction about your trading or whatever it is you are, your edge or whatever trade it is you're taking. And that's why you see that some people are focused on 1 pair or 2 to 3 pairs because they have studied that pair, built confluences around it, and they know that if A, B, C happens, D is definitely going to be the result of it. So that's one of the reasons why confluences are very important. So as a trader, you need to be able to create, study and understand what confluences works for you as a trader. Now, another question that a lot of people, tend to ask, and when Poppy is back on the call, we're also going to ask him that question is, do you believe that chart confluences is more psychological or rather it is more technical? Now, truth is, like I said, a confluence is anything that creates more conviction for you. That's a confluence. So if for instance, you're taking a trade and emotionally or psychologically you're not at pace with the trade you're taking, it means that there's partially a confluence that is missing. There's partially a confluence that is missing from your trading at that very point in time. So let's take, for instance, you're supposed to take a trade, but there's fear, revolving around that trade, or there's, you're having doubts, you're having uncertainties, any of those things, whatever the case may be. And if your confluence is that you need to be set emotionally and psychologically in order for you to take a trade successfully, and at that point in time, you're not feeling it in your psyche that the trade you're on is a good trade, it means that a part of your confluence is failing. So there is the psychological part of it, if your psychology is part of your confluence, and it is supposed to be at the end of the day. In order for you to build a very technical edge, you need to also put your psychology in check too as well. So if your psychology and your technical analysis, and you put them together and something is lacking, maybe the trade sits right, with your, what do you call it, with your entry model, your indicator, your fundamentals and everything. But somehow when you take that trade, you seem not to be at peace, and your psychology is part of your confluence. Then at that very point in time, it goes further to show that that trade could be a winning trade, but you might end up losing that trade because your psychology doesn't sit with it. So you'd notice that every small retracement, every small pullback, any small range, your heart is panicking alongside the trade. It means that you do not have enough conviction. But at that very moment where your technical and your psychological confluences align together, you notice that you take a trade and you're more at peace. And for me personally, that is where most of my swing trades come in. If I take a swing trade, even if I end up losing that trade, but for as long as everything aligns and sits, and that's because that's the kind of trader I am, I find more peace in those kind of trades. Okay, since Poppy Joe is back. Poppy, you're back?
Yeah,
I believe you're muted. Okay. So Poppy Joe is back. Poppy, so you want to give us a chart breakdown and show us, how you approach your confluence, in structure, entry, and how you also place your psychology as well. I don't know if your psychology makes part of your confluence, because for some people they believe as long as you have a technical edge, your psychology is not important. All you need to do is execute, and once you can execute, you're good to go. I mean, that's what some people agree to. Personally, I do not. But then, I mean, every different sizes for different folks, like they say. So, Poppy, you're just, the floor is yours. Take about 5 to 10 minutes to, anyway, 3 to 7 minutes, Poppy, to show us, how you go about your confluences, and if truly entry models are just enough or we need more. Thank you.
All right. Thank you, Ryan. So I want to confirm if my screen is sharing already at the moment.
Yeah, we can see your screen. I can see your screen. I think you have Euro USD open.
All right. That's fine. All right. Good morning, everyone. Once again. So regarding the topic about the entry models, if they are really enough, and how this particular models now, how they can be profitable for traders in the long run, because that's actually one of the major things, right? Now, personally, for me, the things that make up my entry model is that I actually trade from a particular standpoint of view. There's something that I always use as my leading factor when I'm actually analyzing. I have this particular belief that the market is the three important things about the market, which are the three things I preach. In fact, these are the three things that make part of my own trading concept and my strategies. The first is liquidity. The second is market structure. Now, I pride myself in knowing that market structure is a stronghold for me. So I trust in that particular what in my knowledge, and that's like an edge for me. So now that's the second thing. And the final thing is time and price. Now, these three factors now they are important to me so much because if those three things align, then I have an edge. Now it is mostly about pattern this time around. Before I even go into the higher time frame thing, there's a particular one I would like to share with you, a particular setup that happened just last week. And what was the setup all about? Now, I had the setup over the weekend. Let me just show you something. I set up over the weekend, last week, Thursday, rather. Now, I was having a lesson last week, Thursday. And then in that class, I had people that were just talking about what we're expecting for the next morning. Then I had this particular POI I mapped, and I had this particular POI up here as well. Now there's something that let me add my previous separator to it to make it more valid. Now, on this particular day, the setup I had for that day was a sell. Now I have the particular zone here and I have something else here. Now, the things that are acting as confluences for me, the first one is liquidity, and the second one is market structure, or we can call it order
Sorry,
flow.
sorry, Poppy Joe. Please, I sent you a message, but I think you didn't get it. Can you please mention your price, the price areas on your charts?
The price areas,
Like,
like is it not
yeah,
showing
like
both?
your no. Just for the sake of for those who would listen to the audio of this, not just the video as well. So just
Okay,
like
okay.
your where your POIs are, you could just call the pricing of your POIs
All
or
right,
your
that's
the areas where your liquidity exists.
all right, that's fine. So
All right,
looking back at this part, I on Friday I had a setup. The setup was made on Thursday night actually, and the setup was to sell Euro USD around 1.201203. Now that was the first POI I had, and then I have this other POI here. Now there are two things that act as confluences because majority of people that are trading, there are several things. You can use technical confluence. Now, just like Ryan mentioned, you can also use psychological confluence as well. And there are other things that you can use as well. But based on the way I trade, I'm more of a technical person. So I'm more of like I trust more in technicals than in any other thing. In fact, I trust more in technicals than fundamentals. I'm not a fundamental guy. The fundamental part I use in trading is no more than the normal go over to your myfs.com, you check what is happening there, you check for important events, and that's just what I use. Because there's a particular way I actually understand how I can align my strategy with what is happening in terms of fundamentals, which I might get into. Now, this is Euro USD here, and I had the POI here, and I had another POI here. But there was a particular confirmation factor for me. The confirmation factor for me was timing. Now, one thing about all this, our trading system, our trading strategies is that if I was going to trade this based on pattern, and let's say, for example, I traded this based on pattern, for example, then I would have said, okay, there's a BOS here, which is a break of structure. There's a pullback, which is an inducement, obviously. But since I'm not trading that one, let me just check what we have on this chart. If I traded around this 1.1203, and look at the time price got there. Price got there around 1:40 a.m., which is not a kill zone time for me. Now, I'm looking to sell Euro USD.
then I can expect to get my entries during the London Q zone or the New York Q zone. So if price does not come to those areas during that time, then it invalidates my setup. Maybe I'm not making. Let me simplify that particular statement now. If I'm trading and I want to sell at a particular POI, especially on an intraday level, and let's say you're analyzing at the end of a day and you're about to enter into a new day, some of the confluences I use is that if I have my POI, like I'm expecting a sell for the new day, right? And I have my POI just above the point, right? My area of interest, which I have mapped above my open price there, price must return back there during the Q zone. That's a major confluence for me. So that means price coming to this first POI, not during my Q zone, already invalidates the setup. Now, it's more like, that's why you know this particular statement, and it's a popular concept, time and price. You know, we always feel like time and price means time, and they now have price separately. No, they are actually what the name is together. Time and price must align. So that alignment is that price must come at a certain time. Do you understand? Certain things must align. And look at this. Price got into this particular point during a London Q zone. London Q zone happens between 7 a.m. to 10 a.m. and price dropped from there. That is not the only confluence for this particular trade. If you are trading Euro USD and Pound USD, you also know about SMC divergences. Now, all of this is that I'm trying to mention that there are things that act as confluences. Now, look at this on Euro USD. Another confluence. Euro USD, if it's creating a lower low, because if we look at this particular high, this high in relation to this particular high is a lower low, a lower high rather. Then you go over to Euro USD and GBP USD. On that particular day, GBP USD was creating something different, which is a higher high. Now look at the relationship between them. This is the high we had on GBP USD, and look at the high. So that's to tell you that all these things also serve as confluences. One of the confluences I use in trading also is, especially between the Euro USD and Pound USD, is SMC divergences. So in case you don't know probably this particular information, let me give you this chart view. If Euro USD is creating a new high, let's say this is Euro USD creating a new high, and Euro USD is creating a lower high instead, especially when you are expecting a reversal, then that's what we call an SMC divergence, and that's a good thing. Now, a lot of traders believe that these two guys should always align, they should always move together, since they both have the dollar as their currency, as their code currency. But that's not true all the time. We have this on Euro USD, for example. This is simply what we call the SMC divergences. Now, on this particular instance now, which one would you trade? The one that failed to create a new high is always the one to be traded. And on that day, Euro USD was the one that failed to create a new high, which makes it what the obvious value or obvious one we should be trading for that day. So these are things that we put together as confluences that are technical based. Let's even leave logic for now. These are just things that are still technical based. If you want to start going into all the things that make a setup work, then there's going to be a lot of talk we're going to be having. Do you understand? Now, confluences that I build around my setup is timing. And apart from timing, I also use liquidity as a major leading factor. Liquidity is the one that tells me where price is heading to. If I'm checking on daily time frame, if I'm checking my structural knowledge, liquidity is one thing that helps me to know where price is heading to. And that is one thing I strongly depend on when it comes to trading. Now, I have a very keen understanding about, a very good understanding about market structure as well. And people that actually learn PAC trading and PAC concept, they also know why price actually does certain things, which is why I said, in my own opinion, I feel the fundamental part of trading, in my own opinion, I don't really rely on fundamentals. Because if I want to get what fundamentals will do, I can as well go to DXY. That's what I do. Now I know, no disrespect. I know Ryan is a big guy on fundamentals. But me personally, my personal opinion is that I don't use fundamentals. That's just my personal opinion. Instead of me looking at fundamentals, what I do for fundamentals is that I go over to the DXY. Because one thing that I've been able to learn in my own learning stage is that I've been able to learn that everything that happens in the market, the fundamentals, the news, everything has been factored into price. So that means even your fundamental that you're learning, right, or you want to apply, that I want to apply, By the time I come to DXY, and this is what I do even when I want to analyze news, high important events, I don't even analyze them from a lower time frame. If you want to analyze news, you want to know what the market is doing, what I do is I go to DXY, which is dollar index, and I analyze the DXY instead. Now, whatever thing the DXY tells you, trust me, is the thing that will happen in the market, because dollar index is the one that is the leading indicator for price for the dollar, right? Then anything that happens on the technical, if the technical is telling you A, then expect that particular thing that is going to happen in news to also be what, to also be that direction. So I don't bother myself in going further to go and maybe know about fundamentals, what is happening in the country, what is this, what is this. Of course, those things also work, but the way I actually apply it is what I've shared with you. Then talking about other Confluence, let me just give you, I think I'll be ending with this. I'll be showing you my trading plan. Let me quickly just do that because I don't want to take time. At the same time, I'm already taking time. Let me just share my trading plan. Now, my trading plan also consists of my psychology, the other parts that Ryan mentioned earlier, which is the psychology part. So let me quickly share that just now. I hope that with that I'll be able to bring it all to a good halt. Okay, I think it's sharing now. Now, I call my trading notes and my trading plan, right? Now, most of the things that bring about success in my own trading strategy is the fact that we are actually trading consistent setups, right? Let's take a look at this. Now, look at preferred time frames. Now, regarding that topic, of the topic that we mentioned today, is SMC and ICT concept really enough? Now, this is one thing that I will let you guys know. Let's start with time frame. I don't know, Ryan, do I still have enough time? I don't want to go against your time, but I want to use my plan to explain this thing to them. So maybe they will have a very good understanding from my point of view.
Yeah, you have about 3 minutes 50 seconds left. So yeah.
All right, thank you. So guys, look at this. I have something here in my trading plan. I said my preferred time frame. Now, let me just be honest with you guys. A lot of traders are still stuck or are still experiencing inconsistency in trading, majorly because of this particular belief that they have also heard from their mentors. You will hear your mentor tell you, start from the higher time frame, always do this, always do that. Now, I'm not bashing any mentor here, right? But I'm trying to make you understand something here, which is, me personally, my belief about time frame selection is that there should be no fixed or any rigid thing about time frame. Now, if you have learned and then maybe ICT concept says you should go to the weekly time frame to go and find your fair value gap, you should go to this one to go and find this one, and you're also following those concepts blindly, like being rigid around them, then trust me, trading might kind of become difficult. Because at that point, what if you go to a weekly time frame as your plan or as your strategy as said, and that your higher time frame does not have anything of interest for you? There's no structure there. There's no obvious liquidity range or grab. There's nothing there on that higher time frame. But because you have been conditioned to believe that you must always start from that higher time frame, then you stick on that higher time frame looking for what is not there. I personally believe that if I'm trading, I look at it now, I use all possible time frames and I do not limit myself, because what I'm looking for on every time frame is a trend. If my higher time frame, which let's say if you have been made to believe that as a day trader, your higher time frame should be 4 hours. If you go to 4 hours, what if there's no trend on 4 hours? What if the market is in an impulsive state on 4 hours? What if the market is ranging on 4 hours? What should you do then? Should you decide to just throw away that pair or just throw away that instrument and believe that there's nothing for you at that moment? That's not true. Personally, myself, I believe that wherever I see trend is where I start my analysis from. And that has been a thing that has been helping me so far. Because a trend is the major thing we are trading. It is not the time frame. We are not trading time frame. There can be a trend on daily time frame, and there's no trend on 4 hours or 1 hour. So wherever you have that trend starting from is where you clearly start your analysis from and build all the way down. I analyze on 15 minutes time frame. I take 15 minutes time frame as my higher time frame sometimes. And you wonder, is it that I'm scalping? It's because I understand what I'm looking for. My strategy is so flexible enough to be able to know that any way trend day, nine opportunity day. Now, talking about trading strategies, And of course, in my trading plan as well, you can see I have a low risk tolerance. So that's me personally. That's my own experience. That's me. I don't have a high risk tolerance. So, and I will not over leverage. Now, trading strategies. Now, my strategies are classified into two. We have this first one here, and this is a confluence for me, like a confirmation for me. This particular bold statement. I made a post about this one just last week. I said no BOS, no entry. Now, this is a confirmation from that. Is a major thing for me. Anytime there's a BOS, there's an opportunity. And this is meant for, you can see, is a trend following price action approach, right? So anytime there's a BOS, in continuation of a trend, when price creates a BOS, there's always going to be a reversal. And that reversal brings about the opportunity. So imagine, just think about all the trends you've seen in the market and think about how many times there has been BOS, a continuation BOS that has given an opportunity. Compare that to when someone else is expecting that when a trend is doing higher high and higher low, whenever the trend now changes direction, he or she will now position himself or herself to play that reversal. Now imagine waiting for a trend reversal to happen and it never happens, and the trend just keeps on going on and on and on. How many opportunities do you think you would have capitalized on this particular trend than trading or waiting for a reversal to happen? So these are the things that me personally I focus on, and of course there are many other patterns than that. So let's go to the final part of it, entry rules. Now look at the things I use for my entry rules. My setup confirmation, I have plans for them. My AOT. AOT means area of trouble, right? Because obviously you must have taken a trade now, it's sniper entry. And this is one of the reasons why this particular topic is very, very important. Are these SMC patterns, are they really enough? You can take a sniper entry that will even come to sniper loss again. I'm sure that one is very, very common now. You can take a trade now and the trade can change the direction, and it does not mean that what you are trading or the pattern you've traded is wrong. It's just about the context, which I say is the logic behind your trade. So risk splitting, these are my own personal trade management and how to handle losses. These are things that also makes a complete trading system. Okay, because you cannot say you just have technical rules or technical analysis alone without having other psychological things involved as well. Do you understand? So these are few things that me personally can say I use in trading, and then that makes my particular concept a complete one. I'm trying so much to work within time, but I think I will just stop here for now. And yes, I'll stop here for now. So Ryan, over to you. If there's any question, I think I'll prefer answering the question, because I'm trying to cut everything down so much. But cutting things down is not my own. It's not actually my own kind of thing. If you know me, I talk a lot, so I'm trying to summarize. It's making me jump. So if there's any question, I think I'll prefer that. Let's do a Q&A.
Yeah, I totally understand you. I mean, we have kind of like a similar approach to how we like to explain things. We don't just like to leave them briefly, but for the sake of tea and chats, we try to keep it under 45 minutes so that it is easily digestible when uploaded. And people don't want to sit too long like that. And as well, it can also be repurposed for other things. Thank you very much, Poppy. I am enjoying the session. I have enjoyed the session. I mean, me and you, we've thought side by side before, so I understand how we both like to explain things. So one of the questions if we're to go further, that I want to ask is, what's your rule of thumb when a setup feels almost right but not fully aligned? Those setups that it looks like this setup is sharp, but it's not complete. There's still one thing missing. So what's your rule of thumb? What do you do in those situations?
Yeah, that's a very good one. I think this one is one thing that every trader we battle with. It's a very good one. Now, that particular question now is something that I would say discipline is one thing that can help a trader in that part. Now, personally myself, I've come to, there's this particular thing that I've come to learn about trading and about myself, and that is when there was a time I did not set a plan. Like earlier on in my trading years, my trading plan has always been using limits and pending orders. So, and limits are pending orders. Now, a lot of people don't even know the power that is in limit orders and pending orders, all these pending orders. You don't know the power that is there. Because trust me, a lot of, if you know yourself that by art, if you leave market to enter your POI, and then you not take a decision when price gets to your POI. Now, there are two things that you must have studied yourself to that point. That is either you are the type of person that will over leverage, over risk everything, because at that point you are in the moment and your mind or your psychology might not take it. So that time you just want to go all in, you just want to do one reckless decision. So I prefer to use pending orders in those cases. However, when there's a setup not aligning, that everything like it feels off. Like looking at the setup, you can actually feel it in your gut that this thing is actually off. It's not complete. Now, the things I try to do at that moment is I try to stay away. Although there are also times, that is why I said discipline is very important. Now, there are also times that you might want to stay away. And let me tell you, I think there's a particular statement I think I heard it somewhere that when you are doing the wrong thing, pray that the wrong thing will not work. So you not keep on doing the wrong thing. Now, imagine seeing
that's a good prayer.
Yes, now imagine seeing a setup that is quite not invalid. Now, that's why I always say this. There's a difference between analysis and a trading strategy. When you're analyzing, or sometimes this is what happens to me. Like, let me share my own personal psychology struggle now. There are times I look at the charts. Now, these things, it happened to me like I think 2 or 3 weeks ago. I made a post about it on my I think maybe I mentioned it somewhere on the space. It was regarding my signal channel. Now, that particular week on my signal channel, I was not having any setup that aligned with my strategies, because I have all my strategies written down. That's the aim of what that's the purpose. That's the reason why we are talking about consistency now. So I have all my strategies written down. Like, okay, if it does not happen like this, I'm not trading this thing. Then I go to the charts and I analyze. Now, analysis will make some things look like as if they make sense. Like when you're analyzing, like, I feel like this thing can come here and sell from there. Now, the word is can come here and sell from there. Now, because it's analysis now, you're expecting it. It is not actually aligning with your strategy. Now, my strategy has, if there's BOS, if there's inducement or liquidity, and if there's PDA. PDA means premium and discount arrangement. Like we call it POI in my own place. Okay, so PDA means premium and discount arrays, which means the POIs for me. So if all those things are present, then we have a trade opportunity. At the same time, on that particular weekend, I was not having setups, but I was now creating analysis. And I was giving those analyses as signals. Now, I get the first one. That's a prayer. Pray that when you are making a mistake, you are not winning. Because when you make a mistake and you win, you will feel like you can always bend the rules now. So you just bend as small next time. And now, that particular week, I made it known that the two strategies, I think there were 2 signals or so that I gave. 2 of them were not even in I checked my trading strategy notes. I checked what I trade. I called the one that said, she like jazz. So those kind of things now, they tend to happen. There are times you get bored on the chart. I'm a full-time trader. If I'm not trading, if I'm not doing anything, like all my time is always on the chart. If I'm not trading, I'm either outside doing something outside, or maybe I just drive out to go and get something or whatever. So it's not as if I have much activities going on, right? So that means most times you can get bored and you see a setup that is not valid, but you aren't with the scratch at that moment now. So you won't just take out. So what I do in those cases is I just kind of it's a work in progress. I'll be honest with you. It's a work in progress. Okay. But then I know so much that these are things that I should avoid. If it does not happen this way, then no trade. So that's one thing that you always need to constantly remind yourself about your discipline, because discipline is something that you can easily break, and you can even easily make amendment for your discipline. Like, let me just take this on, Joy. It makes sense now.
Yeah.
Like for example, early this morning, I don't sleep early. I don't know why. I've been having that one back and forth. I don't sleep early. The earliest or I sleep is 3 a.m. And early this morning, I was on Eagle USD sell. Earlier this morning. Now I had the setup since last week. And the POI was just there and everything. So price got to the point of interest this morning, and I entered 1.5 lot size. And the thing dropped now. When it was dropping, that kind of vibe now. I shared it on my student group now. I'm in profit already. Then before I went to bed, I just break even and I went to sleep. This morning is already jumping up. That means price went back to hit my break even and it's already going up. Now my discipline plan is do not trade in the midnight. Now, the entry that I made, why did I enter the trade? Because I was bored. Should I put it that way? Or because I felt it's already there now. Should I wait till morning and look for another entry? Just knock on Joe. Which one be this thing? Now, that I said is a continuous process. Don't think if you say you're a professional trader or you're a pro trader, you're a mentor, you now think you figured it out. If you are, you must continually be in the know, knowing that there's always tendency of you making mistakes. Nobody's above mistakes. We are traders. I always tell my students this, I'm a trader. I'm not just a teacher. So what that means, as I'm teaching you also, the things that you are experiencing, I also get to experience them as well. But the way I handle them, I just what is different. That makes what the difference between what a normal person might do, which is a normal student to do, and what me I might do with the experience. Yeah. But then we are all about the market too. So yeah, I think that's that for that.
Thank you very much, Poppy. I think that's one thing I always try to help people understand. And I see a lot of people when they go into traders channels and people who give signals and all of those things, they tend to always want to seek a certain level of perfection. The truth about it is the difference between you and your mentor is one is he knows how to catch himself when he's sleeping. I always say that in awareness, it's all about self-awareness. We are both traders. The same emotions you experience are the same emotions I would experience. Emotions are not trashed away. You can't control them. You manage them. You become aware of them, and you start to take conscious efforts into managing them. And even when you're managing them, there are still times where you fail. I mean, it's how do I put it? It's like grace. You understand? It's like why we are giving God's grace. It's not because we are perfect, you get, but that grace is supposed to support you. And over time, you keep building yourself, your relationship with God, consistently, and somehow, some of those, other things start to go away from your life. Doesn't necessarily mean that you will not be tempted. Doesn't necessarily mean that you might not even fall into temptation. And it's like the same thing why a lot of people God their pastors and feel like their pastors are not humans. We're all humans, you get. And similarly, we're also traders. Despite the fact that we are mentoring, we are teaching, and we are guiding, would also make mistakes too. It doesn't make us bigger than mistakes or not fall victims of whatever market does to people as well. The only difference here is we've gone through it, so we know how to pick ourselves back up. So thank you so much, Poppy Joe, for today. I really do appreciate your time and your effort and making out the time to be a part of TN Chats episode 8, 2025. It was a delight to have you. It was completely an honor to have you on TN Chats. Thank you so much. By the special grace of God, we will have you on another episode before the year runs out, and maybe this time around it would be an avenue for you to share more deeply to us. And we also pray that by that time we would have TN Chat will be bigger by that time, and would see you again with us on the call. And to everyone who joined TN Chats, I always want to say a big thank you to you guys, because you guys are the reason why I'm doing this. And thank you for being part and parcel of it. And I hope you did, enjoy the episode today, and you had an educative and swell time. And if you did, don't forget to always leave your reviews in the group chat. It goes a long way to show people that something is going on here, and we can have more guests that would come and impart in us as well. So thank you guys so much. And as always, it's Ryan for a reason, baby. And I would be uploading this on YouTube. So if you've not followed my YouTube yet, go to my YouTube channel, hit the subscribe button, and make sure to turn on post notifications so that once this video is up on YouTube, you can have access to it and go back to it as many times as you can. And don't forget to share the link, share to your community, share to people around you that are traders, people who need to learn, and every other thing that is needed for them as a Forex trader to learn from the Ryan FX community. And as always, we're not just building a trading community, we're building a movement, we're building a financial movement as well in the industry. So thank you guys so much. Thank you, Poppy. And it was wonderful to have you again. And as always, I'll see you guys on Wednesday during the midweek session. I'll send my analysis out soon. And I'll send you guys a video of the fundamental rundown of what could be moving the dollar this week. So I'll see you guys. Cheers.
All right. Thank you, Jemima.